Well, thank you very much, Bridget, and thank you, Joe, for extending to me the invitation to come to speak at the McGill Summer School. I suppose the idea of somebody closely associated with the IMF, as I have been, turning up 2 years ago or even a year ago would have been completely out of the question, but I suppose times have changed now. What I wanted to talk about was, as I call it, the current state of EU relations, and I was Ireland-EU relations, and I was prompted to do this by hearing of an observation that the late, great Garret Fitzgerald made, I think, earlier this year, when he said that, in his view, Ireland-EU relations were at their lowest point since accession in 1972. And indeed, when you read some of the, or much of the popular commentary, especially in the more tabloid sections of the industry, journalistic industry, it would be difficult not to conclude that there was a strong anti-European sentiment in the land. So, of course, this is a little bit surprising at first glance when you consider that the EU are providing 40 billion in loans that nobody else wants to provide, and the ECB is providing 150 billion of loans, more or less, to the Irish banking system at a time when nobody else will lend. So I began to think a little bit about this and wondered how we had got to this point, if indeed what Garret had said had some basis. So I'd like to offer you some thoughts on that, starting in the pre-crisis period, from accession, considerations affecting the euro area entry, the run-up to the crisis, then dealing with the crisis, and finally some observations on how this relationship, to the extent that it isn't that great at the moment, might be improved. I wasn't planning to do this bit as well, but since everybody else has offered comments on the deal of last week, I'll offer my own tuppence halfpenny's worth on some of the main elements that have come forth on that already. A few caveats. I am not going to talk about the political issues involved, the Lisbon Treaty, neutrality and related matters, simply because I don't think I'm especially qualified to talk about them. Second, although I've been in Ireland for the last year and a half, for much of the last year and a half, before that I was living abroad, but I used to come back to Ireland quite frequently and try to follow as best as I could what was happening. But I apologise in advance for any errors of facts or perception that would come about from, well, just being a blow-in at times, at least until recently. So let's start at the beginning, going back. I remember as a long-haired university student in Dublin, in college in the late 60s, the only topic of debate that we talked about was should we or should we not join, the costs and benefits of joining the EU. But while there was actually a lot of debate about this, there wasn't really any doubt at all what the outcome would be. We were clear that we were going to benefit from open markets, trade liberalisation. We would also, of course, be getting lots of money from the CAP, and we would be getting structural funds for quite some time. So the answer was clear-cut. And indeed, in the years following that, Ireland did, I think it's well recognised, use our structural funds and our CAP to do many good things, and Irish living standards began to move quite quickly up towards the euro average. They then, of course, later on went on to much beyond the euro area average, but that's a different chapter we'll come back to in a moment. Now, the next big decision was the joining of the euro area. And here, interestingly, at least my observation, there was much less debate about this. This was kind of more or less taken for granted. Joining with sterling was not an option politically. We sort of naturally and gradually followed the process and ended up in the euro area. Not too much debate about this. The benefits were clear, low transactions costs, no exchange rate risk, and unlimited access to funds, liquidity, etc. from Europe at low cost and forever. Well, not quite forever, but maybe we thought it was forever. But there was less emphasis, at least to my mind in the debate, about the responsibilities that would accrue to us as a member of a currency union, and they're inherent in any currency union, and indeed to which other countries would also have to face. There was the Maastricht procedure about budget deficits, shouldn't be more than 3%, etc. Was that a worry for us? Well, no, we thought we were in fine shape. We had relatively strong budgetary position at that time, and maybe there was the thought that since we had gotten out of the fiscal crisis of the 80s, that Ireland had sort of learnt its lesson, and there was no risk of us ever experiencing another fiscal crisis. We were good budgetary performers. Second, there was some thought given to the fact that without the exchange rate being available to us, we would have to watch our competitiveness. This was definitely something that I think, if you look back, Central Bank made quite a few noises about this. But again, everybody said, that's all right, no problem, fine, we'll manage with that. And a third element, which didn't get too much publicity, but which I think ended up, I would argue, as being the real heart of this problem, the European Central Bank and the European authorities decided not to make national financial regulation a transnational operation. That is to say, each country was responsible for ensuring that the banks behaved appropriately in terms of lending and so on. Again, I think this was not questioned. Certainly that was fine with us, and we could manage well. So I suppose overall the idea was that we were more than able to manage any of the challenges that might arise from becoming a member of a currency union. And there was probably an implicit assumption too that, well, if things started to go a little bit wrong, if there were some problems that might emerge, well, we were in a good family and the family would look after us without any fuss or bother, and there wouldn't be any real trouble ahead. But there was one element which started to, at least more recently, has been mentioned. It is that somehow or other we began to give the impression that Ireland, we were looking more for what's in it for us from the European system. We tended to talk less about our responsibilities in terms of being a contributor to the euro area and in terms of making inroads, as other small countries have done, not as much as Germany or France, but other small countries have, in terms of formulating overall euro policy issues. So we, of course, spent a lot of time worrying about whether the structural funds would be reduced, taken away from us, given to other countries. We worried about the continual efforts to erode the common agricultural policy. But beyond that, we were not, I think, and here I may be corrected, we did not make a mark in terms of broader European contribution. Now, this assertion has been made relatively recently by, I think, the present government and some other commentators, and it is a fairly serious allegation. It's even been said that Irish representatives tended to go to the meetings in Europe and wherever and sign in early in the morning and then sort of leave as soon as there was no issues that were immediately pertaining and affecting Ireland on the agenda. That wasn't something that we were really concerned about. Things that affected us, yes, we came, made sure we protected as well as could our interests, and then we left. I don't know whether that's true or not. I think it's something that future historians can probably say something about. But the Snow and maybe other small countries were doing the same. I don't know. But to the extent that that was true, and that is perceived to be true, and there's been quite a bit of talk about it now more recently, it does suggest that, if things got a bit rough when it came to the crunch, that the sense that the Irish were slightly half-hearted Europeans, in the sense I've just mentioned, would come back, or might come back to haunt us. So now we move to what I call the run-up to the crisis, 2000 onwards. So the first point, which indeed Per has very well outlined, was the failure of the Maastricht procedure. There were two fundamental problems here. First, it was an ex-post procedure focusing solely on the budget. That is to say, broader elements that would surround the sustainability of the budget were not addressed. They were off-limits. And we had the extraordinary situation of Ireland having a surplus in 2007, and then just 1 year later, moving from that to a deterioration of, 10, 12 percentage points of GDP. Probably unprecedented for an industrial country in the post-World War period. And there was nothing Maastricht really had to say about that, at least nothing effective. And then there was the problem of countries that did breach the limit ex-post of 3%. They were supposed to be fined, they were supposed to be sent to the doghouse, but actually no fines were ever levied. The Commission tried to levy them on France and I think Germany, but you can imagine what happened when it got to the political level. All of this was put aside. So no wonder, if you like, that smaller countries didn't really think this whole scheme was something they had to take very seriously, when the larger countries were apparently flouting the rules and getting away with it. Now, the second problem, deep fault in the architecture of the euro area, was, I believe, that national regulatory policies were left at the national level. The problem is you had an independent central bank, of course, and the central bank said we're in charge of monetary policy, printing money or not printing money, making sure that the inflation doesn't exceed whatever. And they did not want to, or they did not choose to, become involved in what was happening in individual banking systems. Very classical theoretical central bank approach. Problem was, of course, is that once a banking system problems started to arise, once it started to spill over into fiscal difficulties, then the central bank could no longer sit on its high horse and say this has nothing to do with us. And in fact, inevitably, its financial independence, if you like, it's a pressures for it to extend liquidity, even the pressures, as I think some people mentioned last night, to maybe do the terrible, awful thing of monetizing some of these problems, are inevitable. And it's just a political reality all over the world that central banks do come under these pressures, and that's indeed the situation I think the European Central Bank has found itself in to date. So it was a flaw of the currency union not to insist on, I'm not saying total centralised control, but certainly a strong element of oversight, if not more, from the centre. So what did Ireland have to say about these problems? Did we have a view on these architectural flaws, or did we think about it very much? I think on the budget, we were not alone in resisting really anything stronger than Maastricht. So I think everybody was to blame. Ireland was included. On the financial regulation issue, I was struck by what John Bruton, in a number of articles and speeches earlier this year, said when he pointed the finger quite clearly at the European system, said it was your fault that you didn't insist on Frankfurt, or someone like Frankfurt didn't insist on overseeing the Irish and other regulatory systems. I think that's true, but it's what I partly I think it was called, I call the 8th pint problem. When the customer is given the 8th pint by the barman, and this is the one that pushes them over the limit, whose fault is it? Is it the customer's fault for asking for the money, or, following a little bit to John Bruton's line, is it the fault of the barman for not, in fact, insisting that he not be given the 8th pint because it's not good for him? And this is an age-old problem in these situations. I suppose the argument in favour of blaming the barman would be greater if the customer at the outset of the evening had said, OK, let's have a system where we all agree at the outset that, once we get to 8th pint time, we'll stop, and the barman is empowered to turn off the tap. Now, unfortunately, there isn't any evidence at all that Dame Street, the central bank and the financial regulator, were anyway interested in ceding any of this kind of authority to Frankfurt or anyone else. I'm not saying we were alone in that, but I'm pretty sure that there was no appetite, again, for doing that. So I suppose in this context you might argue that there's a little bit to blame on both sides. Yes, John Bruton is right, but the Irish side, to my mind, didn't go around trying to argue for greater controls coming from Europe. If anything, somewhat the opposite. So these are points of difficulty that were simmering around in the system. So now we come to the crisis itself. Against a background where certainly our involvement in Europe was not entirely clear. Now, I said I wouldn't talk about politics, but of course we did have the Lisbon affair between, and that caused difficulties. But we come to the run-up to the decision, and here, whatever tensions that had been simmering around started in a way to become a bit more evident, and were crystallised in a number of very specific and I suppose controversial aspects. First point about the crisis, dealing with the crisis, was of course the decision of September the 29th. Now, it has been argued, and this was to some extent I think what was implied in what the late Brian Lenihan suggested in the interview he gave on the radio not long before his passing. The idea was that the Europeans should have given us enough money. They should have bailed us out, or given us short-term funding on the night of the September 29th, in order to avoid having to give the guarantee and everything that went with it. It is true that the Europeans rejected the idea of emergency assistance on the grounds that, according to their rules, this was only to be given for a very short period and was not to be given to finance a systemic problem. It's just that if there was one, and only one particular bank, that needed a little bit of money for a short period, that's what this emergency lending was about. Now, they have changed it now, of course, but we're talking about the policy at the time. There's no evidence that Ireland asked for additional special treatment. I think the evidence is that they didn't. And you can say that the Europeans treated us no better or no worse than other countries in that period. Probably we can't really accuse them of discriminating against us. That's one point. But I suppose the main point is really this whole question of the burning of the bondholders and the opposition, in particular, from the European Central Bank. And I think this is probably the sorest point over the last 6 to 9 months. So there are, of course, opposing views on this, and the standard ones are. Irish view is that, the reckless lender should bear some of the costs, not all of the taxpayers, etc. The ECB view is that this would lead to two problems. One, contagion, in that if those bondholders were burnt, and other bondholders around the place, all over the place, might be burnt as well. And this would cause runs on banks, including Irish institutions, by the way. So it wasn't just, they weren't just thinking of French and German banks losing money, but they were thinking of Irish institutions being affected, or more generally, Euro institutions being affected. And even deposits could be affected. So you might not get away with just, doing a deal with the bondholders. Other people might think they come next. Now, on this, on which a great deal of ink and noise has been expended over the last year, and to some extent still is, I detect a certain inconsistency in the way that Ireland has approached this particular issue of debt restructuring and burning bondholders, etc. For example, before the Troika arrived in November, the fateful day in November, you might recall that in the weeks beforehand, what was considered to be one of the triggers for this was a statement by Angela Merkel that there would have to be, down the road, a general approach to the debt problems involving bond restructuring, starting in 2013. This spiked the markets, who got very worried. And Ireland, or Irish opinion, let me put it that way, was very, very critical of Chancellor Merkel for having coming out and said this thing, because they said, but she's upsetting us. I mean, we're going to feel the effects of these comments, and it's going to mess us up. And indeed, it did mess us up. Okay, that's one point of view. I mean, one position to take. But to me at least, again, I apologise being slightly as an outsider here, it was slightly odd that immediately after we got the bailout, popular opinion in Ireland started to talk about, oh, let's do some restructuring now, let's do some bond burning, burning of bonds. And this was at a time when actually the other peripheral countries like Portugal were desperately trying to avoid being done in by the markets. And so they were very unhappy with us talking about restructuring, in the same way that we had been unhappy with Merkel talking about a restructuring. But you see, now it didn't matter to us, because we were in the bailout. There was no problem about affecting our creditworthiness, because it was shot for the next 2 or 3 years. So we looked at it differently. But you can argue, why was it wrong for Merkel to do something when it affected us badly? But it's all right for us to do it when it's only, these people in Portugal and Spain that we're not so interested in that might be affected. And more recently, I suppose the position seems to have changed a little bit again in the discussions on Greece and what to do about Greece. The argument is, yes, it's fine to have a restructuring of Greece, but please do it in such a way that it doesn't affect us. So we're kind of switching positions a little bit on this. And one can't avoid the suspicion that maybe we're trying to approach this not in terms of what makes sense for the aggregate group of countries, but a little more in terms of what at a point in time is the best, tactical position for us. The problem is that some of these inconsistencies, at least as I've heard, have been noted by others, and this lingering suspicion, going back to what I was saying at the start, that maybe we see things not so much from a broad Euro perspective, but more from what we can kind of get out of it at a particular point in time. That suspicion, whether founded or not, is around there a bit. The third point, which thankfully I can dispense of, is this wretched question of the interest rate. Now, I think that this is a terrible mistake by the EU to start putting this in the context of individual interest rates for particular countries, depending on whether we like them or not, or whether they're doing well or not. This is absolutely fatal to good friendship and bilateral negotiations. In the Irish case, I think it led to unseemly, lobbying by our politicians, sidling up to Sarkozy, trying to buttonhole somebody at the edges of a meeting. Will you please give us the interest rate reduction? When will you give it? The corporate tax rate, what do you have to do, not to? This should have nothing to do with it. And in fairness, I have to say that my own former institution, the IMF, doesn't work that way. There's one interest rate for 187 countries, and that's that. And it's nothing to do with your policies on tax rates or milk or anything else that happens to be, relevant at a point in time. And I think personally that's a much better way to go about life. So the EU, I would say, is definitely responsible for having poisoned the atmosphere on this particular issue. Final point that sort of I think is lurking throughout this period was, at the time of the bailout, was that I think Irish people maybe felt a bit aggrieved that, after all, we were borrowing from a member of the family, as I said earlier. That somehow we should get special treatment, we should be treated more kindly. However, unfortunately, we all know that if you borrow money from your family or your next door neighbour or your close friend, this can be a recipe for misunderstandings and unhappiness and general aggrievement if the special favours that you think you would like to get, aren't forthcoming. It's a great source of stress in relationships, lending money in that way. Whereas, I suppose the advantage of the IMF, as I've written elsewhere, is that, that's more like borrowing from the bank manager in the distant town. The relationship is impersonal, it doesn't involve all of this extra baggage and so on. The EU, unfortunately, adds to this problem by being a cacophony of different voices, with apologies to Fer. I know people have been trying to improve on this, but really, scarcely a day went by without various sources, named, unnamed, leaking opinions about what they thought of Ireland and what they might do or might not do and so on. And this is not, I think, conducive to a stable and positive kind of relationship. At least that would be my own view. So now, how to improve the relationship? Well, I have a few thoughts here. I mean, to the extent that it needs improving, and perhaps you won't agree with me that it needs improving. I think actually the most important thing, by far the most important thing Ireland can do is to implement this programme. I know that sounds a hard thing to say, but the past, who is to blame, all of that, gets forgotten. The Europeans, however, know that Ireland has a very, very tough programme ahead and is in it for some time, as was pointed out. And I think they will actually admire us greatly if we can live up to this. I think it will be a major factor in restoring the credibility and the reputation of Ireland to be able to do that. Now, second, which I'm glad again I can dismiss, is that the interest rate issue should be parked or gotten rid of, and thankfully it's been got rid of, so we don't have to worry about that anymore. The final point, though, is that I think, to the extent that there's a perception that still in Ireland we are speaking more on these issues in terms of what's good for Ireland, as opposed to, of course, yes, what's good for Ireland, but what is good for the euro area as a whole. How many speeches have you heard from our leadership on euro area policies? What is good for the euro? How could that work well? How do we see the longer term future? How do we manage peripheral country problems in general? As opposed to, we're going to try and get this out of something here or there, and it might be good for Ireland, or it might not be good for Ireland. I know this is a process maybe that one isn't so used to in a small country, but I think over time it would make a great deal of difference if we could be seen to, publicly at least, and I'm told that in private, in meetings, what I'm suggesting happens to some extent. But I think in terms of the public debate, we could have a more European-focused debate and think about how these problems can be best solved for Europe, the Europe area as a whole. And this may come up in two specific respects soon. First, there will be a move towards centralised financial regulation. I think we should not only not resist that, but we should be positively in favour of it. Now, I know the present regime of the Central Bank, Patrick Honohan and Matthew Elderfield, I think everybody would agree that they're doing a terrific job given the difficult circumstances. But people come and people go. They will not be there forever. Governments come and governments go. And so, to guard against the same kind of thing happening as happened in the past, one may need to have a longer-term institutional framework which will actually place the problem more directly at a centrally a point of oversight. And I do believe that fundamentally a currency union cannot be sure of succeeding unless it does that. Second, the next issue that will come up soon is the fiscal oversight issue. Let's call it surveillance. I'm not saying loss of fiscal sovereignty. Now, it's clear that if we want Eurobonds, or things like Eurobonds, there is no way that the German taxpayer is going to sign up to the contingent liability associating a Eurobond issue. Germany will have to pick up the tab if something goes wrong, without demanding in exchange significantly greater say in the running of European fiscal affairs, national fiscal affairs, much greater than Maastricht. Not the commonality of taxes and benefits, I think we would agree, but there are major parts of fiscal policy which could, in effect, come under the oversight of Europe. Do we have a problem with that? Well, we don't like to lose that, but I think we have to recognise the logic. If we want to have the euro area to succeed, I'm putting on a euro area hat here, then we have to recognise that a currency union has got to have a great deal more control over fiscal policies to avoid what's happening. We've had 2 fiscal crises and 1 banking crisis in 25 years. And that's, that's not a great score. And looking ahead for the next 30, 40, 50 years, the logic of a successful euro will require us, I think, to, as I say, not just to go along reluctantly, to be dragged in by the scruff of the neck, but actually to think positively and say, yeah, this is what will make a currency union work, and let's go in there and help make it work and be positive about it. Because after all, at the end of the day, it's not us versus the euro. And sometimes that's been a sense I've got in the debate over the last few months, again, in the more populist area. We are part of the euro area, for the time being. and as long as we're part of it, we want it to succeed, and we should be very actively involved in what will make it to succeed. Bridget, I was going to say something about last week's deal, but I think I might stop.
Maybe in questions.
In questions, because I don't want to take up too much time. Thank you very much, anyway.
Thank you.